So welcome to Module 10 of the QuickBooks Accounting Software training. So this is the final module in this series. And in this module, we look at the financial reports and some of the year-end procedures. So the financial reports, of course, now you've done the data entry, you've done the reconciliations, you've reviewed some of the checks and balances, and now you're looking at the final reports that you can then see how you performed in the year, and therefore close your year and send the reports for audit. My name is Lilian Katiso. I'm a financial management consultant and QuickBooks trainer, and I'm going to take you through this module. So in module 10, we're going to, of course, look at the trial balance. And what is interesting about QuickBooks is that the trial balance always balances. Gone are the days when accountants will spend time, sleepless nights, trying to look for that 1 cent that is causing the thing not to balance. But now, because of the accounting software, it is done in such a way that the double entry is already automated in the background, okay? So that every transaction has a double entry, has a debit and a credit. So what is important, therefore, using an accounting software is to make sure that there's integrity in the data that is entered, that there's logic in the data that is entered, and the accounting principles are observed when data is being entered. Otherwise, your trial balance will always balance, your balance sheet will always be balancing, and your income statement will always be a reflection of the data that you put in there. So it's very, very important that at the time of data capture, the data is captured properly, captured accurately, captured completely. But even when you're looking at these financial reports, then you look at them and say, do they make sense? I normally tell accountants to go beyond balancing books. Yes, the books have balance. The bank reconciliation has balance. So what? The trial balance has balance. But then, are they making sense? Are the ledger balances actually making sense? Because that is where you add value as an accountant. And the beauty with QuickBooks is when you look at the trial balance, the balance sheet, the income expenditure statement, the statement of cash flows, what will happen is if you look at a figure and it doesn't make sense to you, you can always drill down to its root. You can always drill down to the individual transaction that makes up that final balance, okay? So instead of having what we used to have pages and pages of looking for what makes up a figure, but now with QuickBooks, you just go on that particular total in the trial balance, double click on it, and boom, it opens up all the transactions that contribute to that balance, which means, therefore, you're able to narrow down to where there is an error and make a correction of it as well. But also the beauty also with QuickBooks is that it has an audit trail that will help you to see in case there are any adjustments or entries that someone made that should not have been made, you can actually check and see who made the correction, when did they do it, what was the previous amount that was there before the adjustment was made. And so it helps you to make sure that your data is not just balanced, your books are not just balanced, but actually they are making true accounting sense. Okay, so as usual, I'm going to share my QuickBooks screen so that I show you how we can look at these reports and analyze them. Okay, so I'm sharing my QuickBooks screen, the homepage where we normally start from. And as we've mentioned, is that QuickBooks has an audit trail, and I'm going to take you through that first before we go into the different reports. So how would we go to the audit trail? Remember, if you're having a multi-user function, it means that there's more than one user accessing the accounting software. And it means then that you've assigned them different roles to do different things. So the audit trail in QuickBooks allows you to be able to see who did what at what time, okay? So that you're able to follow up any issues that would be of concern. Okay, let me just take you to where the audit trail is. So if you go under reports tab, okay, there's a drop down that comes out, and under accountant and taxes, there is audit trail. Okay, so this audit trail shows all the transactions that have been posted. Of course, for the period, you choose the period you want to look at. So if I'm looking at 31st of December, 2022, it shows the transactions that were posted. So the time it was posted, the person who made the posting, and this is the latest posting. So which means if there was a correction, if there was any adjustment, it will show what time it was adjusted. So for example, so this is showing this was a prior transaction. This is the latest transaction. okay, so that you can see if there's any adjustment that was made. So if you have, of course, more than one user, you'll see the person who's modified the report. In this case, in this file, the only user is the admin. But in a scenario where you have more than one user, you will have the list of all the transactions that have been posted. Okay, so if it's the same, the transactions that have been posted, that will just be the one that shows. But if there's any change, it will show the latest and the prior one that was changed. Okay, so this just helps you to see who is doing what at what time in your system. So let's go to the financial reports. Of course, the beginning point for the financial reports is the trial balance. So if you go to reports, under accountant and taxes, you see trial balance. Okay, so the trial balance, you always have to choose a period as well. In this case, it assumes this is for last month, according to the file that we're using, the sample file, but you can choose the period you want to look at. If I want to look at the whole financial year, okay, I can choose this financial year. I can choose this financial year depending on now which year you're looking at. So this financial year will be 1st of January 2022 to 31st of January, of December 2022. Remember, when we were setting up the file, it asks us, when does your financial year begin? Okay, that is a very, very important question to answer properly, because your trial balance takes 12 months from the beginning of from the first month of your financial year. So in this case, we said our first month of the financial year was January. And so it's speaking from, so now when I choose a financial year, it picks a 12-month period from 1st of January to 31st of December. For those people whose financial years begin in July, for example, many companies in Uganda start from 1st of July. In this case, it will be running here 1st of July of that particular financial year, continuing to 30th of June in the following year, the following calendar year, to give you a 12-month period. Okay, so this is your trial balance. So of course, if you look at the bottom here, you're going to see that it has balance. Definitely, it always balances. It never fails to balance, of course. But what is important then is to look at the integrity of the data. So for example, you might find this is our bank account. So it has a debit balance. But in the event that you find the debit balance is, not the debit balance, but the balance is on the credit side. What does that mean? It means, therefore, that that bank account either has an overdraft facility or there's something wrong. The account is overdrawn, okay, which then doesn't make sense if you don't have an overdraft facility. So the only incident that you'll have a credit balance on a bank account is if there's an overdraft facility. The same way with accounts receivable. If you have a data balances that are on the credit side, then what does that mean? Do you have a lot of advance payments that were made? But if you had a lot of advance payments, therefore, that were made, it means then you have to have made adjustments for deferred income, because someone has paid you in advance for a service that you're going to offer later on. You haven't yet offered it, so you haven't passed an invoice, and therefore there's a credit balance on that particular customer's account. In that case, then you have to pass a journal for the deferred income, so that you remove it for this period. It is going to reflect in your deferred income account, which is a liability account, until you've delivered on the particular job. So it's important to go through each of these different things and see, do they make sense? For example, undeposited funds of $820, is that okay for your business? Is that too much? Funds that you're holding undeposited, you look at that. The stock, is that stock balance reasonable? Assuming you already did your stock reconciliations. So by the time you come to generate your trial balance, you should have done the ledger reconciliation, which we did in module 8. You should have done all the ledger reconciliation. So by the time you're coming here, most of these data are clearly self-explanatory. But in case something doesn't make sense, you can always just zoom, double click and check on it, okay? So you can double click on any amount, and when you double click on it, it takes you to that particular transaction, and it shows you what makes up that particular transaction, okay? So most of the time, an auditor will ask you for the trial balance. That's the beginning point for their audit. And I always tell people that most auditors are happy if you can give them a trial balance, because they know already your transactions have already been captured and you have a trial balance. But if you don't have a trial balance, the auditors would actually charge you for doing accounting for you in order to generate a trial balance. And for most of my clients, they can attest that those who have QuickBooks and are able to generate the trial balance, they can negotiate a lesser audit fee than those who don't have, who cannot generate a trial balance. And also when it comes from the system, they have a certain level of trust about the data, but of course they still have to verify the information that is there. They have to verify the data that is there. So when you have the trial balance, okay, you can export that. So normally you'll be having a folder where you save all your reports, all your financial statements. If you generate them on a monthly basis or quarterly basis or annual basis, you can export them in Excel. Okay, you export them in Excel and create folders for them. Or you can email, if you want to email directly a particular person, email as an Excel report or as a PDF, but you can also print directly from here. Okay, so this is how you see your trial balance. This is how you generate your trial balance, and you can always query it by zooming in and zooming out. You double click any particular transaction, or rather any particular account, and it opens up the details. And if you look there and you see, okay, fine, for example, our rent has always been a particular amount. So if there's a rent that is a different one, then you have to check why was this particular rent a different figure from the different ones. Of course, so you check that the data capture was correct and accurate. Okay, so that's how you check the trial balance to check that it's making sense. Once you're happy, of course, that the trial balance is making sense, then you can go and query the other reports. Okay, so you go, for example, and get your profit and loss report. So under reports, company and financial, you go to profit and loss. So the profit and loss has different variations. You can get profit and loss standard. You can get profit and loss detail, the details of that. You can actually compare a previous period. Let me actually just go one by one for some of them. So profit and loss, I can choose to look at just one particular month, okay? Or I can look at this financial year. So this financial year gives me a 12-month period. Okay, gives me a 12-month period and shows me my performance from January to December. Okay, so my performance from January to December, and I see at the end of the year, we ended up having a surplus of $409,000 and 0.26. I'm writing that figure so that I can explain something to you later. Okay, so that is our profit for that particular period. From this window, you can actually choose that I want to see this report by month. So I can see how I performed on a monthly basis, how my performance for January was, how my performance for February was, and all that. But if I don't want to see all this breakdown, I can collapse the window. So when I collapse it, so it gives me the summary, the collapsed version of each of those different item lines, different account lines, and you can export this to Excel. Once you export this to Excel, and you can calculate your gross profit margins and your net profit margins in Excel for further analysis. And you can see how each of the different months were performing. Okay, so you can choose to see performance by, instead of per month, you can look at by class. Yeah, you can see how each of the different classes performed in the particular year. Okay, so you can do that as well. But you can also, if we go back to the report window under reports, where is that? Company and financial, we can see profit and loss year-to-date comparison. Okay, so this one is comparing, assuming I'm in a particular month, which month. So it's, I mean, if this one is picking the month of December, it is showing December compared to January to December. If I chose to look at another month, a previous month, okay, so it will show the performance of November only, but also cumulatively January to November. Okay, then you can also get a profit and loss report that looks at previous year comparison. Okay, so previous year comparison means it is comparing the same period last year. Okay, if you have the data set for that, okay? So to look at, for example, this financial year, January to December, okay, the sales were $476,000. But the previous year, still the same period, January to December, this is how it performed, okay? And you compare the data set and you see, okay, there was a change of that, the percentage improvement or decrease. That's another report that you can look at, okay, for further analysis. Another profit and loss report that you can look at. So the other ones are how do you call it? Are the detailed one is just giving you like it has too much data, of course. It's giving you like the different transactions in each. So under income, and the sales shows you all the invoices that make up that, okay? So I don't think you want to go into that detail. It's just too much detail. But I think I want to show you this other profit and loss by job. This profit and loss by job, it looks at your customers that you put in the system. So it shows you this customer admin co, okay, the total income, the cost of goods sold to them, and the profit that you've made on that customer. So each of the different customers, you see the performance, their profitability, okay? And of course, you can query and just generate, you can just pick on only one customer. As I showed you previously, you come to customize report and you filter and assume I just want to see one customer. So I scroll down to the customer name. I go to name. Under names, instead of choosing all, I'm going to choose one particular name. I choose Adwinco. Okay, they're the first on the list. Okay, so what happens? It removes all the other ones. It just shows me the performance of just that particular customer, in case you just want to narrow down on that, okay? So there are different reports that you can get for your profit and loss, okay? There are different reports you can get depending on the needs of your business. But I also want to show you the income and expenditure graph. For those who like seeing graphs, I think this is a lovely one for you to see. So it has a pie chart, and this pie chart, it depends on what you choose up here. Of course, you choose the period, okay? So if this period is the whole financial year, it shows it's 12 months. You can choose a particular month only. So it shows each of these months. The keys are here. Green is income, and then brownish color is what is expense, okay? So at least each month the income was higher than the expense, which is nice. But you can choose here. So on the account, it shows you this pie chart. So this pie chart is based on the chart of accounts in this case. So on this one, it's showing you your expense summary. So the highest expense has been on parts and materials, followed by rent and rates, followed by repairs and maintenance, and printing and pre-production are among the least ones. So that is if you click on the tab for expense, that is what it has. But if I click on income, it will show me my highest income comes from sales income, then service income is little, and finance charge income is little. Okay, so you can see them by pie chart. But also I can click up here and choose customer. So I can see how I'm getting money from the different customers. So by customer, income by customer, I'm seeing Kathy brings the highest income. 60% of our revenues actually comes from Kathy, followed by Milborn, and the rest continue like that, okay? But also if you want to see if there are any expenses, I think this one is the one that we had posted as an example. But of course, when it comes to the customer side, you want to look at which customer brings in the most money in case you want to give them a bonus. Bonus or Christmas gifts or Christmas hamper. Then the classes as well, you can click on a class and you see which class brings the most revenue. It shows you service gives the most revenue, followed by import. Then you have the unclassified transactions, and we discussed earlier that you make sure that your transactions, there's nothing that is unclassified before you proceed on, okay? So that's a graphical representation of the income and expenditure report. Okay, so let's go to, okay, still on income and expenditure report, let me do by class and I explain something because I've just mentioned it right now. Let's do the report by class. So what you have to do Okay, this is doing financial year to date. I don't want financial year to date. I want to show the summary. Let me just close this. I want to show you yes, so this is the profit and loss by class. You go to reports under company and financial, go to profit and loss by class, okay? So this is a profit and loss by class for the period. Now, what you need to do, okay, if you, of course, you want to generate your reports by class, you make sure that this column there's nothing in this column, because it means that something was posted that was not identified, assigned to a particular class. So how do you resolve this? You just, for example, if it is this one, you double click on that, and it shows you the transactions that are in there that have not been assigned a class, okay? So let's assume it's Kathy's Classics. There's this $100 here. You double click on that. It takes you to the actual invoice, and then you see here the service. This 2000 was assigned a class, but this 100 was not assigned a class, and it also part of a service. It was not assigned a class. So when you assign a class, save and close, you see the $100 will come out of, refresh, you see the $100 is no longer there. So you have to go through each of the transactions until all of them are cleared out, and now you don't have unclassified transactions, okay? So that way you make sure that all the transactions are allocated their rightful class. Okay, so that is it for the profit and loss report. Let me show you what the balance sheet. So the balance sheet, you go to reports still, under company and financials, you go to UK standard balance sheet. So this standard balance sheet just gives you a summary, okay? It just gives you a standard balance sheet, okay? And this is choosing for this particular, this financial year to date. And I want the whole financial year, this financial year. So it gives you a summary of that, okay? Now, I always tell people, if you printed a set of the income and expenditure statement, you have to make sure that also the balance sheet is for the same period. Because I've seen someone calls me up and say, my balance sheet has a different figure. So this amount here, that's why I wrote it down when I was looking at the P&L. This profit for the year, they say my balance sheet is different, for giving me a profit for the year different figure, because the period was not choosing the right period. You might find that your income and expenditure statement, you've chosen the whole 12 months, but your balance sheet, you did not put the end of the financial year, okay? So how you check that you have the right set of financial statement, you make sure that this profit for the year is the same as a profit for the year that you have in your profit and loss statement, okay? But I always tell people a balance sheet of single period that it makes sense. So the best thing always to do is to make sure that you use the other one, go under company and financial, you look at the balance sheet previous year comparison, because you're seeing if the performance of the business is improving or otherwise, okay? So that's how you read a balance sheet when you're comparing a previous period. So you look at this and you see the current financial year, the previous financial year, they change in between the two financial years, and what is the percentage change, okay? And even when you look at this, then you see if they make sense. Is that the level of accounts receivables you have? Wow, the accounts receivables went up by 253%, okay? So ideally, an accountant should be having an explanation, why did it go up that high? Okay, so there are some of things that you look at and you discuss in your financials, in your management accounts. Otherwise, you just have to keep on analyzing those things. And quick things to look at, of course, now you look at your total current assets. Okay, so you look at your total current assets. Are they able to cover your total current liabilities? Okay, so if you export this to Excel, you can actually be able to calculate your financial ratios. You can be able to calculate your liquidity ratios. You can be able to calculate your profitability ratios. You can be able to calculate your return on assets ratios as well, okay? Once you export this report to Excel, you can be able to do that. But if you want to put comments within here, okay, you can always put a comment. You click on comment on report, When you click on comment on report, then you have to explain, for example, these are staff advance to Peter. So you have to explain this advance was for advance to Peter was for whatever it was, okay? So when you save, anyone who comes and looks at this report, they can always click on that and see what the narrative was, okay? You want to explain why this percentage has gone up like that. You say accounts receivable percentage is high due to different factors that you put there. Okay, so if you want to put comments rightfully in the report, you can be able to do that. Okay, so you have a list here of the different comments for other readers to be able to use. Okay, so that's your balance sheet. That's your balance sheet. You can get a balance sheet report from that. The next one is the statement of cash flows. So you go to reports, still under company and financials, you'll see your statement of cash flows. Yeah, and just before the statement of cash flows, you can actually get your net worth graph, by the way, for the balance sheet. If you want a graphical representation of your net worth, you can be able to see that, yeah? How it grows. Your net worth is the one that is yellow across. Okay, so it's showing that the assets are building up over time, which is good for this company. So you have to check the reality of your scenario. So going back to reports again, I'll show you company and financials. That's where you get most of the reports, of course. And then I look at the statement of cash flows. Now, the statement of cash flows is basically saying the profit for the year that you have, okay? What are the things that decreased and increased to give you the current cash period? If we look at the balance sheet, so we look at the P&L. So let me just show you. So if you look at the profit and loss for this financial year, okay, this financial year profit and loss. Okay, so the closing, the profit for the year was at 407,026. Okay, so that is the profit. But when you look at the balance sheet, if you look at the balance sheet, go to reports and we go to the balance sheet. Where are you, balance sheet? There you are. If you look at the balance sheet for the same period, you see that all that profit is not in the bank. The money, cash at bank and cash in hand is this one. Let me just write it, is 78,495. Okay. So you have to be able to explain, okay, fine. So I made a profit of $407,000, but I only have $78,000 in the bank. So what happened? Okay, so that's the essence of the statement of cash flows. So it is showing a reconciliation of your profit and loss for the year. Okay, so it shows that you had your accounts receivable. Okay, is part of what is holding a lot of your money, a lot of more stock that you did. You know, all that reconciliation coming down. So it's giving you your net cash provided by your operating activities, the sharp capital that was added if you had any investment activities, all the different things that the accounts that were operational in that year, if you had any investment activities, all that will have been reflected. And then therefore the cash for the period decreased by that. And that is why you have all these $78,000 in cash and cash equivalents. Okay, so that's a statement of cash flows as well. What is it again? Yes, then of course the auditors always say, I want to see your general ledger, because how do I know that you've not just put in nice figures for me? So the general ledger is not under company and financials, okay? The trial balance and general ledgers are under accountant and taxes, because some people call me and say, I can't find my general ledger. So if you go to accountant and taxes, after the trial balance, you see general ledger. Okay, so it's warning that the transactions are very many and all that stuff. So yeah. Yeah, so that's the general ledger. So it shows for each of the accounts. So for the bank accounts, all the transactions that went through it. For the accounts receivable, what went through, the deposit. Now, also you have to be careful when you're working on the general ledger. As you can see, this is only showing December. Okay, so if I want to send the general ledger for the whole year, then I'll have to choose a period. I either come here and say this financial year, it gives me the whole 12 months, or I come here and I choose, I type in from January, 1st of January to that, okay? So choosing the period is very, very important, okay? But that is how you get your general ledger. You can export this to Excel as well to share it forward. Which other report would you be interested in? Let me see. Okay, this report you've gone through most of them. Accountant and taxes. If you had any adjustment in your trial balance, you get an adjusted trial balance. Right now, we didn't make any adjustments, so we don't have that. Trial balance I've shown you. If you had any adjusting journal entries, you can get a list of that. I've shown you how to get the audit trail. Okay. Now, there is also a report, fixed asset listing. Most people ask me in QuickBooks if you can get your, what's that thing called? The fixed asset register. So QuickBooks then do the traditional, doing the depreciation for you, no. But it can do a fixed asset register listing for you. At the time when you're buying any item, you can assign it. You can put the item to be listed here under your fixed asset listing. But as it is saying, it is a listing, okay? So it will not have the what is that thing called? It will not have the depreciation. That one you'll have to do you have to do that in a spreadsheet. You have to do that in a spreadsheet. So here, if we had listed them, because most people end up just not doing that because they have a fixed asset register in a spreadsheet. But in case you want to just keep a listing of the things that you buy at the time of purchase, at the time of buying the computer, the laptop, or the furniture, you just assign it to become an asset so that it is listed. How do you do that? So under lists, okay, you can you have here a fixed item list. Under fixed item lists, you can always add new items. Okay, so you add new. Okay, then you give the details, asset number, which account you assign it to, furniture, fittings, office equipment, blah, blah, blah. Is it a new item? Is it a used item? What is the purchase description? Of course, if you sell it, what is a sales description? The date of purchase, the cost at which it was purchased, the name of the supplier, any other asset information, yeah, that you need to keep, location where the asset is the purchase order number, the serial number of a particular asset. If you have warranties to track and expiries, you track that there, and any notes for that particular asset, you put that as well. That is if you want to populate your asset listing. Right now, you can see we didn't populate any, but that is how you do that, okay? Okay, then what else do we need to do? So once you've done your reports and you're happy with everything, and you want to close the year, because you don't want, after you've sent the trial balance to the auditors, and then you wake up and someone has posted a transaction in the year that you've already closed, okay? So you don't want that to happen. So what do? You close a period, okay? One of the places that you go on the left-hand side and under edit, you go to preferences. Under preferences, you go to accounting, company preferences. Okay, under company preferences, there is towards the end here, there is date through which books are closed. So here you can set a date that I want my books to be closed at a particular date. So let's say I've finished when 31st of December 2022. 31st of December 2022, and I have to put a password. If you don't put a password, then it will not, it means anyone can still change it. So what's the need of putting the closing date, okay? So QuickBooks will display a warning or require a password when saving a transaction dated on or before the date of the closing date, okay? So this excludes, of course, estimate sales orders and purchase orders from the closing date restriction, but all the other ones will be whatever. So let me put a password, confirm password. Okay, so now if, for example, no password entered. I hadn't set an admin password, okay, when we were starting out, okay. So now another place also that you can set the closing date is here, setting closing date. When you're setting up the users, yes, you can set what is that called? The set closing dates from there as well. So let me show you that other route. If you come under company, okay, set up users. When you go to set up users, there's a place there. When you come here to set up users, there is a setting a closing date as well. You can do that. The other place, still in the same window, you come to, excuse me, company, and then you here set closing date. Takes you to the same place. So there are different ways of setting closing date. So another year-end procedure that you have to be keen on is passing the journals for the end of that period. So assuming the year has come to an end and you have accruals, yeah? So you have some expenditures that, yes, you've not yet got the bills, but you know you already consumed the utilities, you already had those things, you had some expenditures that you've not yet got the bills, then you have to pass accrual journals. Okay, so you have to pass accrual journals and remember where to pass journals from, and a company, make journal entries. So the journals you have to pass are accrual journals for the expenses for the period you're closing that you hadn't yet captured. Another journal you have to pass is the deferred income journal. So if someone paid you in advance, okay, the year is coming to an end, you haven't delivered on the job or on the goods, it means therefore that income cannot be recognized in that financial year. So you have to pass a deferred income journal to take that income forward to the next financial year. Another journal you have to pass is the prepayment journal. Assuming like many people, so you pay insurance for the whole year, and for example, let me give an example of the companies whose financial year are July to June, but you paid your insurance running from January to December. It means therefore that at some point you're going to have some insurance that is going over another period. So you have to pass a journal for the prepayment. You have to pass a prepayment journal for what has not yet been consumed by the time that year comes to an end. Okay, so let's say you paid your insurance for 2023 from January to December 2023, but your financial year runs from July 2022 to June 2023. So you'll find that there are those 6 months after June that you will already have paid insurance for, okay, but you've not yet consumed. So you have to make that adjustment journal as well. Another journal that you have to pass is the depreciation journal. As I said, QuickBooks doesn't do they do what? The depreciation calculation for you. So you have to have a spreadsheet where you do your calculations for your fixed assets by the different percentages that you apply for your different asset classes. Then you pass a journal, okay? So you have to pass a journal to debit your depreciation expense account, okay? And credit the different accumulated depreciation accounts for the different assets that you have, okay? So you expense the depreciation charge for the year and credit the accumulated depreciation in the balance sheet. Those are some of the year-end procedures that you have to remember to do before you close your year. Another thing that is very important for you to remember to do is the currency revaluation as well, okay? If your account has more than one currency means that that you have fluctuations in currencies because you are translating a foreign currency to your home currency. You have to come and manage currencies under company. There is manage currencies, and you go to home currency adjustment. When you click on home currency adjustment, you have to choose the period in which you want to make an adjustment. And then you choose which accounts you have other than what is it called? Other than the home currency. So in this file, the home currency for this file is dollars. But assume that we have a file that is in Uganda shillings, okay? So if you have a file that is in Uganda shillings, then you choose Uganda shillings is what you want to revalue, and you put an exchange rate for that period and you calculate any adjustment. But you didn't have any balances in foreign currency. So if you have a balance in foreign currency, you'll choose here currency by currency, choose a currency by batch, put the exchange rate, which the currency applies, and calculate adjustment. Once you calculate the adjustment, what will happen is it will pass a journal, okay? It will pass a journal into the system, depending on whether it is a loss or a profit. It will pass a journal in your foreign exchange gains and losses account in the P&L. Okay, so yes, remember to do your currency devaluations before the end of the year. Okay, that's the year-end procedures for you. What's the other thing you need to do? Therefore, once you've closed the period, then you have to do a backup. So under file, so you can do what? You can create a backup. Okay, click on create backup. And then you can choose to create a local backup, or you choose where you want the backup to sit. Okay, so you can browse a folder where you want your backup to be. Okay, so you can choose a file where you want. Let's say I want mine to be on that drive. It's good to always create a folder for the backup. Okay, see, okay. And then you choose to have how many copies of the backup you have to do. Now here, QuickBooks asks you, remind me to backup when I close my company file. Instead of 4 times, I say 1, so that every time you finish working on your company file, it asks you, do you want to do what? Do you want to backup? That way, it just helps that the data set you've worked on that particular session is backed up. In case something happens later on, or file is corrupted or something like that, you can always restore to the last session that you had. So always back up every time you close your company file. Okay. So then you can do a complete verification to just check the data integrity, and then you go click on next. So you can save now and schedule future backups, or you can schedule future backups. So we're going to save now, or let me just click on here, save and schedule future backups. Next, so you can choose that to save an automatic backup copy every how often, okay? Save a backup copy automatically when I close my company file I prefer doing every 1 time, okay? And then you can schedule where you want the backups to be put, okay? So if you have an option, as I already chosen an option where the file is going to be put, it already does that. But if you want to schedule backups, not every day, you say, I want to schedule a backup, you give a description, the location, if you want them in different locations, the number of backups to keep, the time when the backup runs. Some people say backup runs only every lunchtime or every 6 o'clock. The days when you want the backups to run, all those different things. If you want automatic backups run in the background, you can choose that option, okay? Just know that it's available there for you. So we're going to finish that. Okay, I'm not scheduling any backups right now because this is just a sample file. Okay, so it's verifying data integrity. It takes a bit of time. If there's any error, it will let you know there's an error in one of your files and it can actually fix it, okay? So for example, I found some problems with your company file, but don't worry, you can fix most issues by rebuilding your file, okay? So just be aware that it can do that, okay? So it can rebuild that. And then once it's rebuilt, your file is backed up. Okay, so the backup has been saved, and it's saying where it has been saved, and the date of the backup is also put there, so that in case you want to restore a backup, you're looking at the latest date with the latest timestamp. So it has a timestamp, okay, that you can go and restore that particular backup. So we say, okay. Okay, so rebuild data has been completed. If you want to view the issues, you can view the issues and you proceed. So that's how you do the backup. Now, if you want to restore a backup, okay, so you come here, still on file, restore previous backup, okay. So if you want to restore previous backup, it's showing this was the last backup that we did. So I can click on that backup and restore it. If you have other backups for other files, because now for all the backup that you've saved will all be listed here. So you can choose which is the latest backup that you want to restore. And you click on backup restoration, You click on the file and you click on restore backup, and the backup is restored. Okay. So that is how you restore backup. Let's go back to the home page. Okay, so that is module 10 for you. So make sure that you observe the end of year procedures before you do your backup, so that whatever you're backing up is the final file that you want to restore, in case you want to restore. But of course, you don't only back up at the end of the year, you back up as frequently as possible, because you don't know when you might have a hiccup and you need to restore a file for whatever reason. Okay, so this is module 10 of the QuickBooks Accounting Software training. And we have looked at all the financial statements that you might need, and your end of year procedure, and how to back up. But I'm encouraging you, because we've not covered all the details. If you go to the report center in QuickBooks, it shows you all the different reports that can be available at your disposal, okay? In their different categories: reports to do with financial, company and financial, customer receivables related, sales related reports, jobs and mileage reports, supplier reports, VAT reports, stock reports. I mean, the reports are there, okay? So you can tailor them to your business, tailor them to your industry, tailor them to the needs of your company. Okay, so I hope that you enjoy learning QuickBooks, and I hope that you will enjoy the experience of using QuickBooks. And I believe it is going to make you improve on your financial efficiency in terms of efficient and timely reporting, accurate and timely reporting. Thank you for watching, and I wish you all the best as you use QuickBooks. Bye.